Wow, Tesla's stock is down almost 2% today. You gotta hear this. Morgan Stanley's Adam Jonas released a new note and lowered his price target on Tesla stock. He also says Tesla could be unprofitable this year, which, I mean, I'm surprised on a couple different aspects of this. One, I'm surprised he's saying that Tesla could be unprofitable for the entirety of this year. I mean, if you're, let's just say rough numbers here. If you're positive 50 cents of EPS this quarter, you're positive 25 cents the next quarter, you're negative 50 cents the next quarter, negative, 25 cents the next quarter, you're going to be at zero, maybe a slight, loss for EPS. That's kind of insane. And I'm a little surprised that Tesla stock is actually only down 2% today. Morgan Stanley's Adam Jonas lowered his Tesla price target from $345 to $320 over the next 12 months. He says it's going to be a challenging year for EVs, and he's cutting his gap EPS to less than $1. He says if there was ever a time for Tesla to potentially post a gap EBIT loss in the auto business, it may be this year. He says Tesla's product is relatively aged. I mean, I have a lot of things to really pick at in this note, but I think this is probably the strongest one. The refreshed Model 3, that's brand new. I mean, I get it. The Model 3 has been around a long time, but this is a almost completely new product that just kind of looks the same, right? You have the cybertruck that literally just came out, and as a lot of us expect, you're going to get a refreshed Model Y at some point this year. So maybe I could have seen this argument last year, but right now seems like not the best time to make the argument that Tesla's product is relatively aged. He also says EV demand is decelerating in key markets. He says, we note that while US EV penetration, including PHEV, is just above 9%, California EV penetration is approximately 25%, with many zip codes like Santa Clara, San Francisco, in the 40% penetration range, according to the California Energy Commission. On a like-for-like basis, the state of California has a pure BEV penetration in line with China. The incremental US buyer must come from other parts of the country, think Dallas or Cleveland suburbs, where EV demand/infrastructure payback periods are far less in favor. And that's true. That really comes down to the EV network. If you live somewhere like I live in Michigan, you're not going to see that many Teslas out on the road. You're really not going to see that many electric vehicles in general out on the road, no matter from, Ford, GM, Tesla, it doesn't matter. There's just not a lot of charging infrastructure. And that's a reason why a lot of people are hesitant to get EVs that I have talked to, is because obviously they don't understand that, how much range you truly get. Like from my house to my mom's is about an hour drive or so. And it's about 35 miles. I can do that almost 10 times, right? In my Tesla. So is it really a problem, the not having as many chargers? Yes and no. It definitely keeps prospective buyers away from Tesla a little bit. He goes on to say that the China EV market is oversupplied, seeing a barrage of price cuts. He says, we believe price competition will persist in 2024 and will spur OEMs to expand their cost-cutting efforts. For an example, in late February, BYD, covered by Tim Hazio, launched its 2024 Quinn Plus and Frigate 05 Glory facelifts with prices starting at 79.8 thousand RMB for DMI version and 109.8 thousand for the EV version, which are 15 to 20% lower than the 2023 versions, and more importantly, its ICE peers. He also goes on to mention hybrids, that they are emerging as a real competitor to EVs. I don't know where this argument is coming from, but I haven't seen any data to suggest that hybrids are really starting to eat Tesla's lunch or really be competition to Tesla in any kind of meaningful way. Okay, now take a look at this. Adam Jonas expects profitability with GAAP operating margins in the 2 to 3% range, implying underlying EV manufacturing margins, downstream retail, and ZEV credits to potentially be in the red. In response to the falling profitability, we anticipate Tesla will pull back on price cuts to defend margins and cash flow. However, we still forecast Tesla's full year 2024 free cash flow of $100 million for the year. Less than $100 million for the year. What? What? Dude, what are you talking about, bro? That's insane. What? Oh my God. If there's anything that kind of blows your mind here, it's this, okay? I don't even know how to freaking put this into words. What? Dude, I want to know who Adam Jonas talked to. I want to know where the hell he got this number from. Because, get this. Last year, Tesla did about $4.3 billion in adjusted free cash flow. He's expecting 2024 is going to be $86 million. That is like a 98% reduction. Oh my God, you just can't make this up. 2025 is expected Tesla is going to get back to $4.7 billion of free cash flow. That's going to be like a freaking multi-1,000% jump, or at least what? Maybe like a 500% jump, something like that. The numbers look kind of egregious here. And then 2026 is expected to be $10.7 billion of free cash flow. Man, I don't know what kind of inside information they have or what the hell is going on there, but I have some takeaways from this alone, and we'll talk about that here in just a second. He goes on to say, key changes to our model for 2024. Unit volume cut to under 2 million units, implying just over 10% year-over-year growth. Auto gross margin reduced to 11.4% versus 13.2% excluding ZEV credits. Previously, with a Q2 trough of 9.9%, driven by lower volume and more severe price cuts. So expecting even more price cuts. Well, one thing really sticks out to me in this chart in particular. If Adam Jonas is this bearish now on Tesla, and you can't say he's bearish on Tesla, he has a $320 price target on Tesla, but if he thinks the free cash flow is going to fall from 4.3 billion to 86 million, guys, I think you're probably at the bottom or close to for Tesla stock, because that's just not going to happen, right? $86 million of free cash flow, that's it. Yeah, we're going to have a problem if that's what actually is, the number that we do get. It looks like even your most bullish Tesla analysts are capitulating to the pressure. Honestly, I really just can't even believe that this is in their model. Like, seriously, unless they talk to someone that has like inside information or something, I don't even know where you get that number from. And really, point is there with my takeaway from that is, if that's what Adam Jonas believes, just imagine what the bears think. People that are truly bearish on Tesla. Any upside surprise there in cash flow and EPS is going to be really, really, really good news for Tesla stock. Adam Jonas says, quote, "We believe Tesla has significant attributes to be viewed or valued as a AI beneficiary, but the company must see a stabilization in the negative earnings revisions within the auto business first. We do not believe Tesla will get credit as an AI company as long as core auto earnings are being revised down. The process may take a few more quarters to see through, over which time our $100 bear case, quote, may be in play." Honestly, after this report and going over it, I might have to break out the BlackBerry crown, because holy crap. I mean, that's just insane. Like, I don't even have words for this. There's a couple things that I keep kind of thinking about here. And that is, expectations are in the floor right now for Tesla. The expectations for Tesla are basically nothing. I mean, maybe I'm just crazy, but when I see Adam Jonas essentially capitulating and throwing in the towel on Tesla's free cash flow, on Tesla's delivery growth, that makes me even more bullish. Now, could Tesla stock fall? Obviously, that could happen. But when expectations are this low, that is what I love, okay? When a company has low expectations, they can exceed those expectations by a long shot. Odds are, for this quarter that we're in, Tesla's going to post, I mean, hundreds of millions of dollars in free cash flow, like they do regularly on every quarter. If they can just post a really good free cash flow number this quarter and then zero or even lose money a little bit the next couple of quarters, they're still going to beat Adam Jonas estimates by miles, okay? Honestly, I just can't even, dude, I can't even fathom that. That's ridiculous. Overall, I believe Tesla is now even a better risk to reward following one of the highest price targets on Tesla stock on Wall Street while being lowered, but really the estimates in general being slashed. Now, Tesla stock today felt like a rock at one point. Tesla stock at one point today was down almost 5%. The sentiment is extremely negative around Tesla right now. Another reason why I continue to buy the dip in Tesla stock. Tesla hit 173 at the lowest point today, but check this out. You bounced back above this trend line, and Tesla's actually been, rising throughout the rest of the day, obviously from the low, whereas if you look at the S&P 500, there's a noticeable difference there, right? The S&P's falling into the end of the day. Tesla has actually stabilized from the beginning of the day and is rising into the end of the day, which I do find notable to point out. I think a lot of that is based on the actual technicals here. This bear flag pattern, was recognized and Tesla stock fell. It fell 7%. Yesterday fell 4%. Today, down about 1.5%. The sentiment's getting pretty washed out here in Tesla. If you can just find some support at this trend line, that's going to be great news. Now, if you fall under that, your next stop's going to be the 165 range. I think Tesla is an exceptional buy at that level. But Morgan Stanley's Adam Jonas says if there is a year where Tesla really tests the bear thesis, which could be $100 per share, that would imply downside from here of about 44%. 44%. That's insane. I personally don't think that's going to happen. If that does happen, I think the broader economy takes a hit, or rates, stay really high for really long. Maybe that happens with no price cuts or rate cuts, or maybe more price cuts from Tesla. I don't know, but that's a hard sell for me that Tesla could fall back to $100 per share. But if indeed we do get under 165, which is honestly not that far away from where we are right now, and you break under this downtrending channel line here, then you could be looking at $100 per share. But I think as long as we're above that, I don't really think even talking about $100 makes any sense at all. I mean, I keep going back to Adam Jonas, $86 million of free cash flow. Like, I need to print this out and put this on the wall somewhere. This is just egregious, okay? Something would utterly have to go wrong and go sideways for Tesla to only have $86 million of free cash flow. I mean, I could even understand $3 billion of free cash flow, $2 billion of free cash flow, considering the cybertruck ramp and the investment into Giga Mexico. They just started building that factory. But this low is just mind-blowing. My mind is honestly blown based on what Adam Jonas just said. With that being said, let's go over all of your other breaking news that you need to know in Tesla stock today, as well as the broader markets. Now, before we do that, let's go ahead and actually just put this into context, what Adam Jonas is saying here. Tesla has about 11% net margins. Besides last quarter, they upped that to about 15%, and that was just based on that one-time boost to like $4 billion. It was an accounting trick, a tax trick. But last quarter, the September 2023 quarter, you had net margins of about 11%. And we really haven't seen any price cuts since then. So let's assume margins fall, net margins, to about 10%. Well, okay, if Tesla's average selling price is somewhere around $45-ish thousand, we can assume 10% net margins. Tesla's going to make about $4,500 per car. Okay, if Tesla makes $4,500 per car, times that by 2 million, that would be a free cash flow number of about $9 billion. Well, wait, that's not accurate, okay? Because you got to take out operating expenses, you got to take out everything else that goes along with Tesla, investing into the business, everything else. So your free cash flow number is obviously not going to be $9 billion. Even if you reduce this by 95%, and you only assume Tesla will keep 5% of their free cash flow, they will invest 95% of their additional free cash flow. That would still be free cash flow of $450 million. And that is like ultra conservative. That's like crazy for a company to, invest 95% of their free cash flow or their, net profits, right? And only give you 5% of that in free cash flow. I don't care which way you try to work these numbers, you're not going to come up with $86 million unless something dramatically goes wrong in Tesla's business this year. So again, I think when expectations get lowered that much, that's typically a good thing for a stock because that means it's not going to be hard for Tesla to beat the estimates. With that being said, you might be surprised to learn that on StockTwits, the sentiment for Tesla is actually bullish at 57. Yesterday it was at 31, which was bearish. So that's kind of interesting. Message volume is high, just like it was yesterday. Yesterday at 67, today at 65. So not as many messages, but still very high message volume overall. And the participation ratio is at 55. So you definitely are seeing a lot of people talking about Tesla stock. We did have Fed Jerome Powell that testified in front of the Senate. Nothing came out of that. Powell basically said the same old, that they're going to be data dependent, that they probably will start lowering rates at some point in 2024, later into this year. But really, you just didn't see any kind of new information. So it didn't move the markets, and no new information is seen as good news when there was always that chance that we do get bad news. Now, JOLTS job openings, that also came in today. The expectation was 8.9 million. Last month was revised from 9 million, little over 9 million, down to about 8.88 million. The number came out today at 8.86 million job openings. So that was a little bit lower than expected, around 40,000 less job openings, which is basically in line with estimates. That's a very minuscule beat there. Google Trends data continues to pick up for the Cybertruck. The Cybertruck going from 27 to 28. The Model Y dropping a little bit from 32 to 31, but the Model 3 staying right at about 35. So you're definitely seeing some good search trend activity for the Tesla brand, and I'm sure that's due to the Cybertruck. The Cybertruck has really ramped up recently, probably due to the auto shows that the Cybertruck has been at, the tours over in China, and more people actually taking delivery of the Cybertruck. Basically, anyone that sees the Cybertruck is looking at the product like it's an alien spaceship, right? And that can't be a bad thing for Tesla's brand. So again, back to Adam Jonas and back to the other, bears on Tesla stock right now, that's definitely not priced into Tesla as a possibility that there could be some kind of boost to Tesla numbers this year based on the Cybertruck halo effect. And again, I want to remind you, you don't get data from the US on Tesla deliveries, insurance registration numbers, none of that on a week by week or month by month basis. You literally have to wait and kind of imply what those numbers are going to look like until we actually get the numbers. And from what I can tell, the Model 3 specifically is selling like gangbusters in the US. And that also I don't think is being accounted for right now. Now, Tesla's currently running about 3,000 different ads via Google. Lots of these are now short form ads advertising the low starting price for the Model 3 and the Model Y, autopilot coming standard, as well as the low leasing prices as well. We are also seeing some huge option trades coming through from hedge funds and institutions today in Tesla stock. You had 919 orders totaling $1.97 billion with a positive order value of 53%. Now, we'll go over this final number at 8 p.m. tonight, but if you're already at 1.97 billion, you could be at $3 or $4 billion for the day's option activity. Another reason that could have pushed Tesla stock lower in the beginning of the day, and then it looks like you did see some call buyers step in and start, buying that dip. Take a look at this order. In April 19th, $220 call for $183,000. There are some, bullish trades coming in here. These two for June 21st, a 210 call for $335,000, a June 21st 213 call for $556,000, and a June 21st $200 call for $387,000. Those are not small trades by any means necessary. So it does look like some people are going out there and buying some call positioning. But you are seeing some very big trades as well for the downside. Take a look at this trade. A March 8th, $200 put worth $32 million. A March 15th, 230 put worth $146 million. That's insane. These are like huge numbers here. $17 million put for March 15th at the 250 put. March 15th, 233 put worth 13 million. A 255 put for April 19th worth 41.5 million. A March 8th 205 put worth 16 million. I mean, some of these trades are huge, ladies and gentlemen, but you are seeing some call buyers stepping in as well. 10-year treasury yields today are down about 2.5 basis points following that data that we got earlier in the day today. The percent of stocks above their 50-day moving average is up about 4.11% today. 53.68% of stocks are now above their 50-day moving average. Kind of grinding higher here as you're slowly seeing a broadening out of our markets, but not all areas or sectors of our markets are really playing along. Tech, for the most part, starting to do a little bit better. Interest rate sensitive names starting to do a little bit better, but not all of them. Tesla stock on a technical basis, well, you almost have the RSI going back under 30. Currently, it's at 33.95. So if you get under 30, that's going to be really negative. That's into oversold territory. The MACD line did just break under the signal line, this blue line, so definitely in bearish territory as well there on the MACD. Overall, technical is not looking great, but it is, really good that Tesla did actually fall to 173 and then retraced back to, actually close above your support line, your trend line that has been acting as a longer term support. I mean, this goes back to January 25th or so of 2023. So long-term trend line that has acted as support many times in the past. Now you're there again, and this may have been the flush out of the bears, be it that you fell under this and then got bought back up. This can be seen as a hammer candlestick pattern, and it's exactly that. You retrace in the beginning of the day, close near the high of the day, and that can actually start to give you a little bit of a rebound. But we'll see. Let me know what you think about all of this information down below in the comment section. We have a lot of other things to get into in the next video. You definitely don't want to miss it. That will be coming out at 8 p.m. Eastern Standard Time tonight, and I will see you there. In the meantime, if you guys would like to come trade with us live in real time, every time I make trades, I do send out those alerts. We do have some big earnings coming out tomorrow. Check out that link down below in the description of this video. As well as that, go ahead and follow the X account. It's Michael Tyler over there. It's free 99. It costs you nothing to do so. We share a lot of different opinions, different Tesla news, different news across the board. Great place to be overall. Nonetheless, you guys enjoy the rest of your day, and I will see you in the next one.